By the way, I mean, our old friend, that trend line from the all-time highs is not very far. I mean, I think it comes in at about 17,700, 17,694 or so. Yeah, I mean, I think we are almost there. Or no, sorry, that's at 17,775. Yeah, 17,775. So it's still a little away, 75, 80 points away. But with the pace that we are seeing today, I mean, anything is possible. We saw that we saw a push above it, early August, 10th or 12th of August, and then we cracked below it meaningfully on the 17th of August, and we're almost about 70, 80 points away once again as we wrap up this week. Devin Choksi of KR Choksi is with us. Devin, good to have you with us here. Thank you very much. I mean, again, it's the same one, the same question, which is what is going on? I mean, it's absolutely as hot as it comes. A very, very strong market.
Yes, Prashant. Good afternoon. Well, I think the market possibly showing a lot of resilience also because of a few facts. On one side, I think we are seeing the dollar-related activity keeping market a little bit nervous. The fear that I think the FIs might sell in case I think the rupee depreciates against the dollar. And that could be one of the reasons for which I think yesterday the sell-off took place. But I would think that I think that sell-off was probably I think in hurry which it took place. On the other side, I think the market is attracting a lot of new investments, and definitely I think this is the good news. That if you are continuously attracting good new investment into the market, and I think variety of stocks I think attract new investors, possibility of I think market stabilizing would remain very high in a given kind of a sell-off. So that tells me one thing that I think in this market, whenever a sell-off takes place, I think there is a new buying, resurgence in the buying taking place. And that is where I think possibly one is looking at the opportunity. Of course, I think the fundamental points, I think, which are very, very strong. Second half of the financial year, we are likely to see the impact of higher credit growth rate resulting into better earnings from the corporate side. Lower amount of, I think, commodity prices because of good agricultural production, I think, which would possibly come out of good rains. And also contained inflation as far as I think the industrial commodity items are concerned. All in all put together, I think would possibly show relatively better performance the second half of the financial year, so which is attracting funds into the market. So it's a combination of two things. On one side, the potential for higher amount of fundings going forward, and at the same time, inflow of I think sustained inflow of I think good money, which is chasing I think quality stocks into the market, and that's where I think you see the buying taking place during every sell-off.
Well, today has been broad-based. Even IT is participating. Names like Mindtree, Coforge, all these stocks doing well. The other space which has made a bit of a comeback is chemicals. So SRF is up quite a bit, and Oberoi Real Estate is now your top F&O gainer, 6% higher on that stock. Devin, hi, good afternoon. Thoughts on these real estate names? Big moves today in both DLF and Oberoi.
Yeah, Anuj, good afternoon. I think largely I would think that some of the projects are getting near completions. And as a result of which in the quarterly result performance, I think you will see the reflection of them. Most of these companies are having a higher amount of visibility also because of the fact that the amount of square feet that they have taken up for construction, and I think which is likely to materialize into the sales in coming quarters with the completion of these projects. And that is one of the good part I think that one can argue for, that you are having a good sustained demand taking place in the environment. And as a result of which, particularly in the residential premises, I think are having a sustained demand taking place. And that's where probably I think some of these companies are showing up. I'm not too sure about, I think they're attracting additional new funds from some long-term investors at this point of time. But I think more of a market condition, which is basically, I think, asking the investors to put money into it. Wherever I think the results are likely to be better on a quarterly basis, that would happen first as far as I think some of the real estate companies are concerned.
Okay, all right. If real estate is going to do well, then cement consumption is going to go up. So, Devin, I wanted to ask you about a couple of these cement names. India Cements, every, I think, 6 to around 9 months, we hear about various rumors. Maybe a change of promoter, maybe, in fact, the large investor in there, Mr. R.K. Damani, who has close to around 21% stake in the company. So, the financial performance has been anything but good. It's in fact been rather poor, and it's been lagging what the industry does. But how do you approach the stock at around 225 to around 230 rupees? Clearly, the street is hoping for some inorganic growth, some consolidation in the industry. But at 230 rupees, it trades at around $80 per ton. Would you buy it, or would you say that there are better opportunities out there?
So I think, Nigel, good afternoon. The opportunity-wise, if you see cement as a space, I think offers a distinctly high and good opportunity. Regional players, particularly in the South India, I think would possibly see, I think, sustained buying also because of the larger capacity with some of the large players that they have created as. So from that perspective, you definitely feel that, yeah, there is an opportunity out there because of the market condition remaining strong. And post monsoon, when the construction activity starts taking place, also because of the fact that the infrastructure projects are rolling out, also the fact that I think new industries are coming up in different pockets of the country. So obviously, I think you're going to see the larger amount of cement demand continuing. On the other side, the good news is that I think the cost pressure has possibly, if not come down completely, has marginalized to a certain extent. And as a result of which, I think the threat on the profitability of cement companies, which we saw in the last quarter, I think possibly is getting a little bit receding now. So from that point of view, I would think that I think better profitability prospects, along with the higher demand continuing for most of these companies. I think the valuation wise, yes, I think somewhere I think they're expensive. But profit performance has not come up. But as I said, I think it is always high on potential. Performance is possibly expected to follow. And this market wants such kind of stories. Because on one side, you are having the higher amount of construction activity taking place. Other side, I think the building material supplier companies, I think, are finding better demand in the traction. And that's where I think the market is following some of these stories. Not too sure whether I think one would like to simply immediately jump into it. But yes, I think selectively larger pan-India players like Ultratech and Holcim Group, they remain better placed comparatively compared to many of the smaller regional players.
Okay, by the way, just today, of course, we've seen so many stocks do well. One that stands out is Tata Tele Maharashtra, TTML. That is, remember from 290 we had seen all the move all the way down to 90 on that stock, and today it's circuit up 20% higher on that stock, and with the huge volumes. Tata Tele Maharashtra is a stock that we are referring to. So big move happening on that. Devan, just trying my luck here. Do you track this? Have you seen this move over the last many days?
Not really, Anuj. I think we used to have this particular stock under our coverage, but I think for long, I think we have dropped that coverage. So not enough about the company.
Okay, that's on TTML has done really well. And just another one that I want to ask you, Devan, is on Federal Bank. That's seeing a bit of a multi-year breakout after last quarter's numbers. I think last quarter numbers, the stock was at 87, 88. And since then, we've seen this move. Now, it normally every time struggles at around 110, 115. But this time it's just taken that off. Any views here, Federal Bank?
So many of these smaller mid-sized banks, I think, are basically attracting larger amount of buying interest. The theory going around is that I think these kind of banks would probably find some kind of strategic alliances, stroke consolidation happening eventually into their businesses. And that could be one of the reasons for which I think in some select pockets, investors putting money into this kind of companies. The larger banks where the AUM growth is systematically happening, where the AUM size is big, likes of HDFC, likes of ICICI, I think their possibility of higher amount of growth as far as the stock price is concerned, I think is not happening. They are relatively, I think, in a range of around 15 to 20% growth in a year. Whereas some of the small mid-sized banks, I think they are attracting a large amount of money, at the same time, higher percentage of appreciation in the portfolio. Beyond that, I think the fundamentals and the business condition wise, I believe that the most of the banking companies are today finding favor with corporate. Most of the corporate borrowers are basically demanding higher amount of money, and that's where I think you are seeing the growth. The retail book has already been growing systematically, and in some of the many banks, I think where the housing finance portfolio is also, I think, very systematically growing. But I think in case of Federal Bank, probably I think the size and the amount of money which is chasing into them under the strategic possibilities, I think would be the prime driver for driving this particular stock price.
Devan, but on the banking names, the other theory going around is, fundamentally you have another IPO, Tamil Nadu Mercantile Bank IPO that's scheduled for the coming week. I was just looking at the valuations. On a trailing basis, it appears that it's coming at around 1.5 times price to book, but on a forward earnings, on the forward book, it appears it's coming at around 1.1 times odd. Now, quite a few of these banks that are listed already, that's the RBL banks, your Federal Bank that you just mentioned at around 1.2 times odd. So from the broader banks, if someone was thinking of applying in the IPO, do you think there are better options already in the listed space, and you'll get adequate quantity as well if demanded? Go ahead.
So, Nigel, I think yes, there are category of investors who would basically apply in IPO and probably I think make their gain out of flipping of the IPO investments. But people like I think us who are basically investing largely through our PMSs into the portfolios, we feel that I think today the opportunity is best for some of the larger banks because some of the larger banks with a higher amount of AUM have a higher amount of possibility and that too on a sustainable basis as far as their credit growth is concerned. Because I think their corporate customers are probably demanding more credit. So maybe I think down the line, few quarters from now, I think some of these larger banks could possibly show relatively higher performance in their books, and that is where probably I think our focus would remain buying into some of them. So we do agree that I think compared to the smaller and mid-sized banks, I think they may probably give the average return. But at the same time, I think this is a sustainable return that we are expecting for next 3 to 5 years. And that is where I think probably our preference remains with the larger banks like HDFC and even for that matter ICICI, Axis kind of companies.
Okay, larger banks, they have better access as well, and to deposits, their CASA ratio will look better, and in a rising environment, interest rate environment, the cost of borrowing may not go up so much. Got that point.